Hello everybody, welcome back to Clear Surf Financial Education. Carl Keister here. So we are 7 days into the new year, and I thought I would start off by bringing up one of my predictions, and that was the prediction that the GOP was going to hold on to the Senate, which did not happen. They lost both seats, one by 0.5%, one by less than 1%, but nonetheless, the Democrats are now going to have a House, the Senate, and the White House. So we're going to talk a little bit here in this video about what that means for your retirement account or your investments. But before I get to that, I want to mention that I'm going to have links down below since you're on a new year. Maybe you want to start looking into a budget. Maybe you want to do something different. I have created a course and I walk you through what I do for my budget. Also some ways you can save money on taxes, especially since we're into the new year. You can still fund your IRA, your traditional and your Roth. But in that course, I go through that. There's a section on that. I talk about risk management. I talk about life insurance. I talk about estate planning and retirement planning. So those links are down below. Now we're into the new year. I thought I would bring up the what happened yesterday. I had a insurgent, I guess they're going to call it, or intrusion into the Capitol. So as I've seen, I've done some reading and actually talked to or saw a post by a family member who was actually there. You're going to find out that 99.9% of those people are there to support Trump, who were peaceful. And of course, you're always going to have some agitators that are going to break off from the group, and they're the ones that went in and disrupted the Congress and the announcement of Biden becoming president, going with the electoral votes. So I just think it's kind of interesting at this point in time because you know, it was all summer long, we saw cities on fire and the Democrats did nothing. They didn't mention it. They just sat back and smiled, knowing it was hurting Trump. And now the first time we come here, I thought maybe Joe Biden would step up and say something positive. I mean, obviously what Trump did, inciting violence, was stupidity. But, you know, that's who he is. He does some dumb things, and that's one of the dumbest things I think he's done in his 4 years. With that being said, I thought Biden would come out today and have a more positive note. He talked about unifying the country, and even though 80 million people didn't vote for him, he was going to have your best interest in mind. And the very first press conference today, I only watched 5 or 10 minutes of it, he was talking about how policing versus, if that was a Black Lives Matter protest versus predominantly white protesters were there for Trump, was handled differently. That's not uniting the country, Joe. That's just putting fuel on the fire. So it's going to be interesting because I think after watching all summer of all these riots going on, all this stress and all this budding, neighbor versus neighbor, you're already putting gas on the fire. So maybe you're just reading a speech that someone in your administration made, or maybe your VP made it. I don't know. I don't want to get too political, but I think you're definitely going down the wrong rabbit hole with your first comments with 13 days to go before you become president. Now, getting back to this channel, this is not a political channel, it's a money channel. It's about investing. So the market is actually positive today. Why is it positive? Well, he promised he was going to raise taxes, so we know we're going to see taxes going up, but capital gains is supposed to go up on those making more than $1 million. It's going to go from 20% to 39.6%. I'll leave some links up to the video I did not that long ago that talked about all the consequences of him winning if he did, and it looks like that's going to come to fruition. Also talked about raising taxes on people making more than $400,000, so that's all in that video. I'll link that. So what do? If you're a long-term investor, I think you need to just kind of stay pat for right now. The market's up, it's positive. And that's largely because you can't really go anywhere else. You can't leave. If you leave your money in the bank because you just want it there for security, I agree with that. You should have 3 to 6 months worth of emergency reserve sitting there. So if you lose your job, you can pay your bills. A lot of folks in the restaurant industry, the average millennial doesn't have $1,000 for an emergency. And then this comes along and now they're going to learn some lessons, I think, there. The same thing if you ever talk to someone who lived through the Great Depression, you wonder why they've always had so much money sitting in the bank, so much money invested, because once you live through having nothing and everything being lost, most people don't want to live through that again. So I think there will be some lessons coming out of this for those folks in that restaurant industry, and not just people that work there, even business owners who predominantly put a lot of their life savings and work and all that blood, sweat, and tears into their business, and that's going to be their retirement. That's going to be what they live off in retirement. If they can't pass it on, they'll sell it. So we'll see how that goes. So what do? If you're investing in the stock market, you invest in the NASDAQ. I think with all these things going on, technology is still going to do well. So the NASDAQ went over 13,000 today for the first time. Bitcoin, I have to bring that up. Bitcoin is over 39,000. Just that quick, it's down $500. 10 minutes ago, it was over $39,000. I made a video on Bitcoin 3 weeks ago. I'll leave a comment or a link to that. 3 weeks ago, I mentioned when it was at 17,000, be careful because it went from 3,500 to 17 to actually 19,000, but it did this back in 07 when it went all the way back down to 5,000. But here we are, 2021, March of last year, it was at 5,000 roughly, and then it rallied up to now $39,000. So why are people piling into there? Because we keep printing money. As the government keeps printing money and sending out stimulus checks, people on the other end, if they've lost their job, they need the money, they want the money. But what we got to keep in mind is every time they print money, it devalues our currency. So all you have to do is look at the euro, which during the crisis, it was around $1, I want to say $1.05. Let me just take a quick look. And in March, it was $1.06. So now we've got it at $1.22. So we've seen a huge, almost 15% move the euro against the dollar. So those folks that want to travel overseas, you just lost 15% of your American dollar when you convert and go overseas. But are you going to go and put that money into a bond at this point in time? If you look at the rates, let me just pull up a bond yield here. The US 10-year during the crisis was down to 50 basis points. Today it's doubled. It's at 1.07. So if you're willing to buy a bond, you're willing to collect 1% over the next 10 years, there you go. You got a 1%. But if you look at France, they're at negative 0.3. UK is at a positive 0.26. And Germany is at negative 0.555. So if you want to give your money to Germany for 10 years, they will guarantee you will lose more than 0.5%. That's why the market's going higher. So if you're a long-term investor, you have to stay positive for right now. But I will say, coming full circle on this whole political agenda, if Biden gets in there and the progressives put pressure on him and he caves into it and starts raising taxes and going after the Second Amendment, he starts doing all these things, then what we saw last summer with the protest is just going to be, that's just kindling. That's just going to be the beginning of what you're going to see during this 4-year administration. So as the Democrats sat back and smiled for 6 months, they're going to deal with it for the next 4 years. And they just need to pray that the market holds on, the virus doesn't get any worse, because now we've got another strand of the virus. So no one knows how well this virus or how long it's going to last against the original strand. And now we're dealing with a second strand. So with all that being said, there is no way that you can sit there and think, well, we're probably going to get another 15% on the S&P and another 44% on the NASDAQ like we did last year. There's going to be some bumps in this road. But with that being said, I think you just need to pick and choose it. I mean, gold, silver, that if the dollar keeps getting weaker, we keep printing money, those commodities are going to go higher, in my opinion. Bitcoin could keep going higher because now you're having hedge funds and billionaires who are looking to diversify out of the dollar. All their assets are in real estate and things based in dollars. So how do you get away with that? You put part of it into Bitcoin. You can only buy so much, things overseas where the currency is not tied. Maybe you buy properties in Europe, but eventually if you want to bring that money home, you might have to wait a while to get it back to a decent currency exchange rate. So anyway, so it's going to be a very interesting year. And my number one prediction, well, not my number one, but one of my 10 predictions was the GOP hanging on. It was actually my 10th prediction, but the GOP hanging on didn't happen. So now we'll see whether the Democrats are going to get full control. I can only hope that there are going to be some Democrats in the Congress and in the Senate that actually don't want to see this country go too far to the left, because that could just go to hell in a handbasket awful quickly. I think there'll be enough people that are going to want to do the best thing for the country, because after all, that is why they were elected. Let's hope that they're reminded by that. And I think maybe by some of those radicals yesterday breaking into the House or to Congress, we'll remind them that they're there, they are working. So maybe nothing less. It will remind them they're working for us. They're supposed to be there representing the people, not trying to get their third and fourth and fifth house in all the underhanded deals we know of going on in the last too many administrations to remember. So with that being said, we'll leave it there for now. We'll catch you next week. We'll see what happens over this weekend, and we'll follow it closely. And I'll bring to you any dramatic changes. I'll bring another video to you, but if not, we'll see you on Tuesday. Have a good day.